Today I have the pleasure of speaking with Ian Chalmers. How are you today, Ian?
Great, thanks, Tracy. Great.
Well, I have to tell you, we've got water pipes bursting all over Toronto and minus 40 below zero. What's the temperatures in Australia today?
Oh, Perth was a pleasant about 35 centigrade. Still about 26 now at night, which is still very pleasant summer's evening.
Well, do you think that heat is contributing to your explosive stock movement? I got to hit you with that first, Ian. You are moving so rapidly. I think I read here 64% in the last 30 trading days, and of course we have you pegged moving up at 60% just last week. So talk to me about your stock movement.
I think it's finally we're getting the message across to the market, and the market is now taking a bit of interest as well. By the way, there's a little bit of creeping back in, but the last week we were able to announce this first stage of the approval process for us, and I think a lot of the punters have been out there waiting for that to happen as well. So it's a bit of a combination of those sorts of events, bit of market interest plus some good news.
All right, so you just asked my next question, so let's get right into it. PAC basically recommended approval for you building your mine. Can you explain to the InvestorIntel audience what that really means? Because this is big news for the industry.
Sure. Sure. In the state of New South Wales, they have a sort of a double whammy system, and basically the Department of Planning has the power, the authority to approve projects. But several years ago, the government decided to bring in an independent review body called the Planning Assessment Commission, or the PAC, as we know it. And what happens is that the Department of Planning gets all the information from the EIS, then hands it over to PAC, who then spend another 6 months reviewing it all, have public hearings, get us to talk to them, and finally you get to a point where they say, we are recommending it for approval, subject to conditions. And those conditions now we have to talk to the Department of Planning, talk to this PAC about it, with the hope that ultimately it gets us over the line. So we're 95% of the way there.
95% over the line for building what is basically a billion-dollar facility. Is that correct?
That's correct, yeah, that's it. And now we just got to get that small issue of getting that $1 billion together.
All right, and then what we're going to be producing, of course, I don't think many people understand that we have zirconium, hafnium, niobium, and rare earths. Can you give us a little bit of an overview?
Yeah, that's it. I mean, basically, we've always talked about being the zirconium and niobium and rare earth project. And with the rare earths, we actually have two different materials. We have a light rare earth concentrate and a heavy rare earth concentrate. And currently they'll go off to get processed elsewhere and turned into separated rare earths. One of the little things that we've been looking at now for about 2 years or 3 years is the hafnium. And hafnium is a very interesting metal, and it's a bit like the rare earths. It's a very opaque market, it's a very opaque pricing and demand structure. But we knew we could produce it. But probably 18 months ago, we were approached by some potential end users who said, look, if you can produce hafnium, we're buyers for it. So now we're doing some tests to make sure we can recover it and produce a product that those guys want to buy.
So everybody who's looking right now at the rare earth market, because I do believe we have a turnaround bull market happening as we speak, you are the number 3 largest market cap in the rare earth sector. Is that correct?
I think so. So you keep telling me. And I believe that is the case. As I said, it's always hard to gauge, and I must admit I've got too many other things to do than worry too much about where we are in the market, but it's nice to see getting a bit of recognition.
And that partly, one of the reasons why you've been so successful is you're also producing gold, and you actually have revenue, and you're multi-commodity play. Can you give us a bit of an overview of what's happening with gold right now?
Yeah, gold's interesting also. And gold for us in Australia, and I'm sure Canada is exactly the same, it's the weakness of the currency which is having the big impact on the gold price for us. I mean, a week or so ago, we were sitting at about $1,600 Australian an ounce, which is pretty fabulous. And our production costs are about $1,000, $1,100 an ounce. So right now, we're clearing $500 an ounce on 60,000, 70,000 ounces a year. So we're potentially making 30 to 35 million a year cash flow out of the operation, which is not huge, but it's a nice little earner, keeps us all employed and keeps us out of the market, having to go back to the market to raise money. So it's a nice little project.
Well, obviously, some of us would argue that that's an advantage, and of course, you're quite the workaholic. I've known you for years. And what should we as shareholders anticipate in the next, say, couple of quarters, Ian?
I think the key things now are obviously to get the full financing package, or not, the financing has to be done. That's very important. We have to get the full approval in place, which is what I meant to say. And hopefully that will be in the next 2 months. But that then impacts on our financing program. We're working really hard as fast as we can to put the money in place. And I think you'll see some interesting developments in that over the next 3 to 6 months. So that combined with some new process work, new process improvements we've made, new recoveries that we're doing, and lots of other good things that just help the revenue base for the project.
All right, so you heard it here. Thank you so much, Ian, for joining us. I look forward to an exciting spring.
Thanks, Tracy. Nice to talk to you.